In fact, since we're talking about the bond market and how it will react to that CPI number, let's straight away go across to Latha. CPI. So, Latha, I mean, at the headline, I think we all want to celebrate that we are finally below 4%. But will the market share this number as much?
It's only a headline celebration by the media, calling it 5-year low, because this 3.54 is largely because last year, July of 2023, it was 7.44. There was an unusual tomato onion spike, and that has, helped. This high base has helped this 3.54. But within this, there is reason to be happy. Not really to beat the drum, but to be happy that the market expectation was between 3.65 and 3.7. So to that extent, it's undershot the expectation. The even bigger undershoot is in food. Food, of course, was the one that was feared, 9.36 last month. That is for the month of June. But that's fallen all the way to 5.4%. Even here, the market poll that we got was 5.5. So it's a tad better than that. The big veggie inflation, which all of us feared, 29% in June, is now down to about 6.8 or thereabouts. So clearly, the worst of the tomatoes and potato inflation is behind us. We know that we have got an excellent monsoon. I believe the governors in the monetary policy speech said 107% of long-term average. So chances are that, pulses, which are still at 14% year on year, will also start slowing down, and, inflation will not be that big a pain point for the Reserve Bank. See, the important point the market will watch are the future numbers. In this particular policy, everybody knew that July is going to be low. So July, August, September, the forecast originally of the Reserve Bank was 3.8. But in this policy, they made it 4.4, which means they still believe that something could go wrong. There could be a rise in prices. So let's watch. If it way undershoots that 4.4 average, then people will start pricing in perhaps an earlier Reserve Bank rate cut. Just a word on the core inflation. That's jumped up to 3.4 from 3.1. Core is always sticky, but this again is a base. Last year for the same period, Jan to June, it was at 6% and coming down to 5. Now it will start going down towards 4. The base, 2023. So you will start seeing the core inflation inching up. But I think all told, the Reserve Bank's 4.5% for the full year is actually safe after the set of numbers we got in July. If anything, there is a small chance of undershoot. A word on the industrial output. We don't look at this number much because policy is not made on the basis of this number. It's only an input into GDP. Came in at 4.2, a disappointment because our poll and everybody else expected at least above 5% number. So this is a bit worrying. And within this, two things have done badly. Capex has done badly. That's come in at about 2.2 or something, 2.6. And consumer non-durables has come minus 1.4. If consumer is also, receding, and capex, of course, May, June, the government was not spending much. It was election time. Then you're a little worried whether the pace of growth will have to slacken a bit. But let's wait and see, early days.
All right. Latha, interesting sort of context to this entire data point and putting it in the right one. Thank you very much for joining us. With that, we'll take a